In this video, I'll be reviewing LLC versus S Corp versus C Corp versus Sole Proprietorship. But before getting into the video, you can create your LLC with Northwest by using our affiliate link in the description and save 83%, paying just $39 for LLC formation. You'll also receive a free year of registered agent service and discounted rates on annual reports and EIN services. Now, let's get back to the video. Now, first of all, we're going to look at sole proprietorship. So we're gonna go ahead and start by looking at the definition of a sole proprietorship. Now, what does it mean? Now, as many of you would know who are watching the video, it's a business owned by and operated by one single person. Well, that is obvious. Now, let's look at the pros and cons of a sole proprietorship, or also known as a sole trader. So I'm just gonna go ahead and write down the pros. All right, perfect. Now the first pro we have is simplicity. Simplicity. Now it's the easiest and least expensive structure to set up. The next one we have is flexibility. You have complete control over your business decisions. So this means that you don't have to listen to anyone else. You have full control over your business. The next one we have is tax benefits. So profits are taxed as personal income, avoiding double taxation. And lastly, we have minimal paperwork. Minimal paperwork. So there's less paperwork involved compared to other structures because this is the most simplest form of business structure as it's owned by just one single person. So you wouldn't have to go through that complex process of filling in many documents and getting it registered from the government. All right, now let's look at the cons of a sole trader. Cons. Now the first con we have is unlimited liability. Unlimited liability. So your personal assets are at risk if the business faces legal issues or debts. So what this means in simple terms is that let's say your business falls in debts and you don't have enough money to repay those debts. This means that your personal assets, for example, your home, your properties, they can be at a risk. So you might have to sell them to pay off these debts. So there's always a risk when you're a sole trader. The next one we have is limited resources. So you may have difficulty accessing funding or attracting investors. Now, usually sole traders are considered risky. So most people or banks don't always willingly give you money or funding so that you can grow your business. So it's always hard to attract funding. The next one is lack of continuity. Lack of continuity. Okay. Now, the business may dissolve if you become incapacitated or die. So this means that if you die, basically the business dies because there is no one who's looking over the business unless you have basically maybe your son who's gonna inherit that business from you. But otherwise, it's just gonna die after someone dies. All right, now let's look at limited liability company or LLC. I'm just gonna give this the heading so you guys can keep track of it. So this is sole trader. Just gonna keep it simple. All right, now let's look at LLC. So first we're gonna start with the pros, obviously. The first one being limited liability. Limited liability. All right. Now your personal assets are protected from business debts. So as we were looking at sole trader, where we were discussing that you will be forced to sell your personal assets, but here it's the opposite. Your personal assets are protected from business debts. The next one we have is pass-through taxation. Pass-through taxation. So profits and losses flow through to your personal tax return. The next one we have is flexibility. So you can choose between member managed or manager managed structures. So you have options here. The next one is perpetual existence. Well, which is opposite of lack of continuity. So perpetual existence, which just means that the business doesn't die after the owner dies, which means it can be continued. The next one and last one we have is member managed or manager managed, which is basically linking back to the point of flexibility because you can choose to manage your LLC yourself or appoint managers. All right, so that is it for the pros. Now let's go ahead and look at the cons. So the first con we have is state-specific regulations. So state-specific regulations. Okay. Now LLCs are subject to state-specific laws and regulations. So this means that you have to abide by all the laws of the state, otherwise your business could potentially fall into danger. The next one we have is annual fee. So you may need to pay annual fees or franchise taxes to maintain your LLC. The next one we have is ownership restrictions. Ownership restrictions. Okay. So some states may have restrictions on who can be a member of an LLC. And lastly, we have operating agreement. So it's recommended to have an operating agreement to outline the rights and responsibilities of members. All right, that is it for LLC as well. Then let's go ahead and look at S corporation. So let me just write that down again. S corp. And obviously, first we're going to look at the definition of what is an S corp. Now, a corporation that elects to be taxed as a pass-through entity, meaning profits and losses flow through to the individual shareholders' tax returns. Now, let's go ahead and start by looking at the pros of an S corp. The first one we have is limited liability, which is again similar to an LLC. So, your personal assets are protected from business debts. The next one is pass-through taxation. So avoids double taxation by passing profits and losses to shareholders. Then we have tax benefits. Tax benefits. So S corporation can potentially avoid self-employment taxes on salaries paid to shareholders. And lastly, we have perpetual existence, which you can already identify means that an S corporation can continue to exist indefinitely. So let me just write it down. Perpetual existence. All right, perfect. Now let's look at the cons of an S corp. All right, the first one we have is complexity. So S corporations can be more complex to set up and manage than an LLC or a sole trader. The next one we have is ownership restrictions. Ownership restrictions. So S corporations cannot have more than 100 shareholders, and all shareholders must be US citizens or residents. The next one we have is state-specific regulations. State-specific regulations. So S corporations are subject to state-specific laws and regulations. And lastly, we have election requirements. Election requirements. So S corporation must meet specific requirements to maintain their S status. So alright, that is it for an S corporation as well. Now, let's look at our last one, which is C corporation. So I'm just gonna go ahead and write down C Corp. Perfect. And you guessed it right, we're gonna look at the pros again. Alright, so looking at pros, the first one we have is limited liability, which is again similar to an LLC and a S Corp. So your personal assets are protected from business debts, basically the same concept which we have been seeing throughout the video. Next one we have, which is again a repeated one, perpetual existence, meaning that the business does not die with the owner. The next one we have is capital raising. So easier to raise capital by issuing shares of stocks. So meaning you can always give out shares and you can easily raise your capital, which can ease the financial situation of the business. The next one we have is employee benefits. Okay, so C corporations can offer tax advantaged employee benefits. And lastly, we have succession planning. It's a new one again. Okay, so C corporations can be easily transferred to new owners. So that's a very, very big advantage. So there is not that hassle when you're transferring from one owner to another one. All right, now let's look at the cons. All right, so cons. All right, so first one we have is double taxation. So the corporation pays income tax and shareholders pay personal income tax on dividends. The next one we have is complexity, which matches with an S corp. So C corporations are subject to more regulations and paperwork than other business structures. Then we have cost. Now setting up and maintaining an S corporation can be very expensive. And lastly, we have shareholder agreement. All right. Now, C corporations often require shareholder agreements to outline the rights and responsibilities of shareholders. All right, so guys, that is pretty much it. We have looked at every business structure: LLC, S Corp, C Corp, and a sole proprietorship. And we have looked at their pros and cons. So obviously you could rewind through the video, go at the specific part you want to see, and then hopefully pray that you can come up with a decision of what structure you're going to pursue for your business. So all right guys, that'll be it for the review. I hope it helped you out, and I'll be seeing you guys next time. Peace out.